Let's keep going to see that. Max it out. Yeah, it's under $2. It was under $2 in June 2010. But you can get the whole graph if you want. You have to go to Google or something, or Robinhood. It'll give you no Robinhood. Gives you up to 5 years. But definitely, or maybe it's. Oh, actually, when you see a stock like this and you see a straight line where the price is never changing, that means that it didn't exist. So this has been 10 years almost. This has been going, or I bet it's longer than that. Well, anyway, I'm not covering here what exactly what this is because the information is available on the internet and you can read about it, and there you go. So okay, man, let's see what is it doing now right now, and let's see if we learn something here. Oh, this is definitely buy right here. This, I think this was around December when it was really cheap. It was $30, and now it's 55, 60. Actually, it went up to, no, that was before. It was 70 here. So imagine if you have a $70,000 or $700,000, you sell it here, and now you spend those $700 to buy it at $31, $31, and then it's going up. You know this is gonna go up all the way up to here, right? By looking at history. You sell it at 50, 60, 70 again. You're doubling the money in 1 year. You're definitely gonna be more than doubling it. That's without even buying and selling on these peaks. Without even looking at that. So I will say right now is buy. No, wait a minute. No, look at that. And look at that. It's a sell time. Sell. It's clear to sell. We'll see if it's true. We'll see if it's true. You can also sell part of your stocks if you're not sure, and that gives you a safety. You're not risking that much. It's time to sell, but you sell it automatically. The time to sell is when it drops. Well, it's time to sell right now. You can sell some now and keep some, and when there is a drop, you sell. Because right now, I didn't see the big drop. Like if you would have sold here, I think it's gonna, I don't know, I think it might go up. But it's very risky right now. It's risky. It could go up more, but it's very risky. Now there is another thing that you can do is if you want to buy and sell every day, you just change this to, instead of interval 1 day, you can see it hourly as it happens. It is amazing because every minute it's showing you how it's changing minute by minute. Oh, the market didn't open yet. It's 8:24 right now. And it also works for minute by minute. These indicators change. But now we're talking about 5 cents. So that means 5 cents on this peak right there, which tells you to buy. This is overnight. Oh, when it's purple, it means overnight. If you have access to buy and sell overnight, you can buy right here. And then when it gets up to here, and you have an indicator to start selling, and it starts dropping, you sell. And you go and you make, and you go from $50.75 to $50.90. So if you have a $500,000 or something, that means that, let's say you have $507,000. I mean, 500,000 $507,000 to 500 and almost, let's say it goes to 60. You made what's that, $2,500? Yeah, you make $2,500 on your sleep from which is like you already beat a whole month apartment or 2 months apart. Whatever you make in 2 months, you can make it on your night while you sleep from 2:24 a.m. to I can't see it because I have this stupid thing here. Okay, let's see the whole thing. 7 a.m. You just put it on automatic. You don't want it to drop. So this will take some hours of night work, but in one night you can make the same money that you make in 2 months in an apartment. And this is definitely much better way to make money. This is sell right here. Unfortunately, if you want to trade every day, you have to be waiting. Let's say you sold here your money, 51.98, 500,000. Actually, with 500, that will be 1 month of money. I lied, it's not 2 months, it's 1 month. Because if you have a property that is $500,000. But I was thinking about money that you already made last year, that it used to be, yeah, it's just much better. Because if you, let's say you have a property that is $120,000, in 1 year, the price of it is not gonna rise to $200,000. So I'm thinking, compared to $100,000 that you had a year ago, now you have 500,000, right? Which means you can make $2,000 on your sleep, on your while you're in your pajamas. You don't have to call anybody or anything. You just have to use your head. This is something that you would have bought here. If you this is hours, huh? These are not days. This is hours. Okay. You bought it here because you have, well, buying time here. But look at this, effectively, definitely buying time. Let a few hours go by. Wait until the green one, sell. Right here, sell. So there is a difference of what? 51.30 to 51.50 or so. About 25 cents. 25 cents. That means every $200 you make $1. So $200,000 you make 1,000 in 1 day. Yeah, this is from 1:12 p.m. to well, no, let's say from 12:36 to here 1 p.m. That's 1 hour. In 1 hour you make that much. Well, let's say you buy here and it goes down, right? You oh, these peaks are really short. These are short. This is minutes, okay? So this is a period of a minute that you're gonna be able to catch it. You miss it, I miss it. You can buy at the wrong time, and then you don't make that much. You don't make 25 cents. But if you, let's say you're lucky enough, you got it at this point, and it goes down more, you sell, and you wait for another one. You wait for another good indicator. Some days you just forget about it. It doesn't look good. You'll also learn how to do that. This is day trade. This is different than the other one that I was showing before. But you can see very clearly that we are all the way up to wherever the mouse is, which is 51.47, and way down here is where the volume graph is, which is 51.20. The ATR is, I don't know why it's so 3 cents. Why is it 3 cents? Oh, that's because it's 14. This is the ATR 14, which is 14 minutes. In 14 minutes, this stock is changed in price 4, 5 cents, 3 cents. And you want that to be high when you're buying. See how it's high around here? Time to buy. And then see how it's low around here? And you have this big old indicator, time to sell. So you're definitely buying and selling. Even if you don't have this data, let's say that day you bought it and it went down, you sold right here, you close the whole thing and you go to the beach. Okay, screw it. It's possible that it might go up again, but you say today I'm not gonna risk nothing, whatever. You can wait and see if it starts going up and you feel confident, you can buy again and wait until it goes up. But the question is, you never lose a lot of money. You have to be willing for it to go down a little bit, but don't let it go down all the way up to here, below to whatever you bought it, So if you're smart, you can make that much. Now let's change it back for a little bit to the what is it, 1 day. So we get the ATR 14. Which is $1. So that means it's very low now. Time to sell. So right now is not a time to be buying, because you can lose. You can drop a lot. You can drop $1. So if you buy, and it's not good. It's very risky to buy right now. So even during the day, it's not very. You have to buy and sell, and get out of there right away, because it's very risky right now. But you can still make money. The thing is that even though it's risky, and it could crash, it could drop all the way down to 30 again, or it could drop to 40 or whatever. You can buy a 51. Let's say you buy a 51.52, which is the current price right now, and if it drops to 51.20. Or 51, whatever you're willing to risk, you will. If you say let's say you have $51,000, you have exactly $51,000 worth of it, and you're gonna risk 1,000. But you don't even have to risk it. You can sell it and wait until it stops dropping, and then buy it. But that takes more time. You have to be watching it. But if you don't want to be watching it because you want to be doing something else, making $10 an hour or whatever, working for somebody else, you'll have to wait until you have a big opportunity like this, and forget about it until you see something similar like that, and this goes down so much. There is no volatility, means nobody cares about it, and it's been overbought, and the volume is much lower here than it's over there, and you're like, this is definitely a sell. Well, you didn't make that much money so if you bought this before 2019, during December 20 or whatever, when you bought it around there, right around here, around this area, and then now in a few months you go from 30,000 No, yeah, from $30,000. Well, it didn't actually go down to 30,000, but it did go up to 51, 50, 52. Might go up to 52 today, but I doubt it. It's time to start selling. Start selling probably even earlier. I would have probably sold here. I wouldn't miss this last little thing that could do a big jump and then boom, or it might just keep going a little, maybe a little drop. Maybe that helps the stock for people to want to buy. Be, be careful when I'm saying the stock here. I'm talking about 100 stocks. It's not just one stock. Also, the other thing is that when you're buying and selling this stock, they the people that organize this make their commission, which is very tiny. It's not big. So buying and selling, maybe you might, if you have like a lot of money, you don't have to like calculate it and worry about it. Then you have a different problem. But for a little bit of money, you don't care. It's very tiny. Yeah, because you look at the volume. The volume is 13 million. You can change it to, instead of 1 day, I think you can change it to a month interval or a week. So you're gonna see the volume in a month or a week. Sometimes when you do that, crazy things happen. You can also take a look at, yeah, like if you were gonna buy it, you're not gonna buy it and sell it in a month. You have different indicators here. Even if you see this, this is up. So don't sell. Here, this is the one that we were looking at, December. That peak. That's it. People bought it right away. Sometimes you see this little peak happen again and again and again, and the price keeps dropping. Well, you just sell. You see that happen. Now you can really see the whole thing here. It goes up to 2010. Oh yeah, the graph adjusts as you go, which is nice. So look at that. Boom, this was high. Buy here. Then wait until this starts dropping. Maybe sell here. But you realize when you sell that it starts climbing again. Now, of course, this doesn't work because this is ATR 14. It's for the last 14 weeks or months, whatever this thing shows. And it's not really showing. I mean, let's stretch it a little bit, see what happens. No, even if you stretch it, it doesn't. It's not. It's an ATR 14 months or weeks. So you don't know what happened here, really. Maybe it did drop all the way down here or it went up. It's just too smooth of a graph for you to tell anything. But it definitely is something there. Look how high this is. But this is high. It looks high, but this is not the real thing. You have to divide it by the price. Price of $20 and the price of $50, it makes a big change on this graph in percentage wise. But when you're looking at it into 1 day, this percentage is low. It doesn't. You don't have to worry about it because you're looking at 5 cents. In 50, if you have $50 and 5 cents, or $50 and 3 cents, when you divide this number by the price, you're gonna get the same number. What's the difference? So so you can look at it intraday. This graph tells you a lot, because you can actually see how it varies. Let's change it back to and it's true, because your average price is about the same, but if you're looking at the pennies, it's a big difference. They go up and down. The pennies go up, and basically what I'm trying to say is that the pennies go up and down a lot, which is, this is talking about the differences, but the total price doesn't go up a lot. It just goes up a few pennies, right? So this graph is really nice. You don't have to divide it by the total price, and look how much it changes. Okay, here is going up and down 5 cents here every 14 minutes, and here every 14 minutes is going up only 2 cents. So I hear there's okay, apparently it was oversold, but this is low here, but then it jumped up. Oh, it jumped up. So look, buy. Here don't buy because this is low. Wait, now buy, because you have this indicator. Oh, I'm sorry, I'm pointing on the camera. No, you have this indicator here that telling you to buy when you have this one, and this one even dropped down a little bit farther. So you buy at this point, not this point, because this is very frustrating when you're like, oh yeah, it's time to buy, but if you're not looking at this, it's not time to buy, because this is still dropping. There's no volatility. Now here's volatility. Oh, you buy now. You buy here, and even if you buy, let's say you buy here, and no, even if this keeps going down instead of changing up, you sell it, and you just wait until it goes up again, like here. So actually, if it keeps going down, and even if it goes down faster, guess what's going to happen to this? This is going to go up, and it's going to give you a better indicator to telling you to buy right now. And then you sell here, of course, when you see this green. Here is opposite. I'm gonna change the colors on this. You can change the colors. You can make it red here, so red means to sell, and you can make that green. Green means to buy. This is a free tool, by the way, huh? Yahoo Finance. Okay, this is an hour long. I don't know if I'm boring you or you're excited about this, or I don't know. So give me a feedback on YouTube. Leave a feedback and asking questions. Yeah. So I hope this helps you understand the market. The only thing I didn't cover is when to sell. There is a way to set up mathematically to the penny. Then you say exactly 1 hour. Yeah, you make it mathematically to the penny, but then the book that I'm referring to, it's like $5 in Amazon, and I left my copy when I moved, and I had to buy another one because there are things that I don't remember. It's the selling point and the buying point. Well, there is 2 selling points. There is one point when you sell, when it goes up and you're afraid that it's gonna go down. That's one selling point, which is nice. It's good because you made some money. And then there is a selling point when you're not willing to risk. The stock is going down, and you want to just sell it. You're tired of it. You're tired. Oh man, did you see what just happened? The price just jumped. I think the market opened. No, it just jumped from 51.26 to 51.52. Now these things don't last forever. I've seen this happen. You sell right away when you're lucky and this happens right in front of your face. Oh, I'm so glad I caught that on video. By the way, this refreshes one every minute, so we don't know. You might try to sell right now, and the price might be still 51.26. Oh, there is another indicator here that I have that I haven't covered. Let's cover this. This is a 200-day. Well, in here is 200 hours average. That's another indicator. When you're below this, you don't want to buy. And when you're above this, when your price is above this, it's on the rise. This is a 200-day moving average. That means you have the average price on the last 200 days. So you see this is going down. So that means the average price in the last 200 days is actually dropping. Actually, if you have it set for 1 minute, it's the average price for the last 200 minutes. So, and this doesn't make sense. You change it back to, I'm not gonna try to catch it on camera. I'm gonna just change it to 1 day. And there it is. That's the volume. No. What is it called? AMA. It's called AMA or SMA. Moving average. They call it the moving average, 200. A lot of people look at them other moving averages or 80 or something else. This is the one they want. If the price, let's say you're going to invest for long term, you wait until the price goes above that, which is also an indicator, and a lot of people start buying. So you won't be the only one buying. It's good. This guy this book says stay away from anything that is below that. Now, when was this above? If you look at it, it makes sense. You see how it's above the 200-day. Let's say we can use a 200-day moving average, and you buy it when it's really close to the 200-day moving average here or here, because it's above it, right? It's above it. It's above it. This is going up. You better buy. You better start thinking about buying, and you buy here when it's already, it's gonna go up, and you're still above that 200-day moving average. And this was April. Oh, not to tell me the year. It was in April, right? I think it went back a few years. June. You're good there. That's another indicator you gotta look at. So if you don't listen to this video all the way up to here, you wouldn't miss that. What do we see here? Well, we're still above the average. Right there, you're below the average. How do you know? But this doesn't tell you when you're gonna be. But you sell here. You sell. What do you see here? Oh, this changed here. Right there, that's the selling point. No, I'm sorry. This is your selling point. Right there. Now, it's still above the 200-day moving average, but look what happened. If you would have bought here, in just a few days, you have to sell it. Because look, this will be below the price that you bought it. Right? Yeah, but this doesn't look good. Right there, this doesn't look good. It's way too high, a bit above the average. It's just, and there's an indicator to sell, and this black line is all the way is bottomed out. You sell right here, and you're happy. you're investing for a long time. So oh, I had another datum, and I was trying to find out, because when the stock market was going down and down, I'm like, how long is this gonna last? And I think I got an answer of a month or 2 months. So during those 2 months, the recession, whatever, you don't want to have anything on investment. You just want to get out. But I waited too long, and I missed the point, because I was scared. I saw it started going up, but I was too scared to buy, and that's why I missed it when it was 30. And actually, when it was 30, I didn't know all this that I'm showing you. That I didn't look at the history, but the stock is great. So I missed it. I missed it at 30. Oh, we wanted to see how many years is that. So you sell, and according to this, you shouldn't be buying it. But look, but if you buy it here at this point, you still have to watch it, because you're way below this line, which is not recommended. But this data that I'm giving you is to buy one stock. This is you're buying the whole 100 stocks, divided into little pieces. Does it work for this? I don't think so, because look, you can buy it when it's really down below that, and if it drops down a little bit, of course you sell and you let it drop. But if you sell, and look, you wouldn't miss this junk. So there you go. Those are the risks that you gotta take, but they're tiny risks compared to this junk, this big thing that you can make money with. So this is 3x. This, if you're buying this, you're automatically doing 3 times as much as if you were buying stocks on your own, because every time you buy one of these, they buy 3 of these, the 3x thing, and you get all the earnings. They only make money on commissions for buying and selling, and if you lose, if they lose, you lose 3 times as much. But with less money, you can make more money faster. Like, instead of making, let's say, remember the example that I gave you? Let's say you have $200,000. You sell your house. You want to buy it. You sell your house, and you want to live on renting a house for a year, and because you want to buy a $500,000 house, you can do that. You can start. Look, you can do it in January, and in December you have the money already made. You rent. You pay the rent. You pay $10,000 for renting a house or an apartment or whatever, and then in 1 year you can buy a $500,000 house, and you're gonna have to pay taxes. No, everything will be you spending the money. So you have all that money, or you lose. You don't have expenses. You have losses. Everything, all the money that you make selling your house, at the end of the year, it's like you lost, because you spend it. You buy a more expensive house, so you don't pay taxes. You can do it that way. There's, I don't know. Well, this data is what I think it should be, but is it true? No, I'm not an accountant. I have no idea. I never done it. I don't know if that's true or not. But this is just an example. Well, now I have a better house. I'm living in a better neighborhood, and then you can wait. Then the year after that, let's say you don't invest nothing, and then you say, oh, I want to make money again. So You sell the house again, $500,000. You invest the whole thing while you're renting it. You spend $10,000 on renting an apartment or whatever, and you bust your butt, and now you can buy a house of $1.5 million house. At the end of that year, you report that as a loss, of course, but you have 1 million. And then in the next year, you probably say, I'm gonna go work for a minimum wage or whatever. And you live in the $1 million house, and then guess what? Then the next year, you sell that $1 million house. January 1st, you sell it. So you invest from January 1st. Actually, you do it when the stock market has a good chance of going up, right? So you want to do that when it's down, like December this year. Perfect, amazing. So you sell the 1.5 million, you double it. Now you have so you make 200%, right? So that's $3 or $4 million. Now you're in the $4 million. So, yeah, as you can see, in a few years, you have you have $5 million, and I don't think you pay any taxes. I don't think so. I can't guarantee anything. But and that's probably without looking at this too much. So now you go from a $200,000 house. Now you have a $5 million house. Okay, I don't know if you don't see this. I don't know what you can see. I gotta go. Talk to you later. Bye.